What we're talking about now is questions you should be sure to ask your lender when you get ready to go. And it's a real simple list. I have 10 questions. Number one, what are the most popular mortgages you offer and why are they so popular? Now, most loans today, most mortgages today are kind of plain vanilla. You don't have, no income, no asset loans. You don't have a lot of interest-only loans. You don't have a lot of that stuff in the world today. But what are the most popular options? Are people getting an ARM, an adjustable rate mortgage today, so they can save money? And how much would it save? Does it make sense? Number two, which type of mortgage plan do you think would be best for me and why? And that's something you should probably ask at the end of the questions, not at the beginning. Number three, are your rates, terms, fees, and closing costs negotiable? And the reality is that some of the closing costs are not negotiable because they're driven by the lender, they're driven by the closing attorney, they're driven by the title, the closing attorney, driven by other things. But your lender, it has direct control over a good portion of the closing costs. Number four, will you have to buy mortgage insurance? And if so, how much will it cost and how long will it be required? For those who don't know, private mortgage insurance, or if you get an FHA loan, it would be called mortgage insurance premium. So it's either PMI or MIP, is usually required for people who pay less than 20% down. Now, most lenders will let you discontinue the private mortgage insurance or the mortgage insurance premium, although with FHA loans, the mortgage insurance premium never goes down, never goes away. You have to refinance. They'll let you, on regular conventional loans, they'll let you drop your private mortgage insurance once you have at least 20% equity paid down on the loan. And again, I mentioned earlier, mortgage insurance is never discontinued on FHA loans. Number five, who will service the loan, your bank or another company? It doesn't really matter what the answer is because in most cases, if you get a loan from Wells Fargo is not going to be the bank that services it. They're going to sell that loan to someone else. It's going to be backed by Fannie Mae or Freddie Mac, and one of their servicers is going to pick it up. You just need to know. Number six, what escrow requirements do you have? Will I be required to escrow my taxes and insurance? Can I waive escrows? Would there be an additional interest rate charged if I wanted to waive the escrows and not pay my taxes and insurance into an account? Number seven, how long will this loan be in a lock-in period? In other words, the time period that the quoted interest rates will be honored, meaning will I be able to obtain a lower rate if it drops during this period? Meaning when you tell me today that my rate can be 6.75% and I lock in, how long will that lock last? And how would I have the opportunity to let my rate float down if rates went down lower? Number eight, how long will the loan approval process take? It shouldn't take more than a few days. They should be able to get the loan fully underwritten in 3 or 4 or 5 days, a week at the longest. How long will it take to close the loan? Honestly, good lenders can get loans closed in 3 weeks, 4 weeks, something like that. And then are there any charges or penalties for prepaying the loan? You don't always have to ask that question today because you can't have conventional loans, FHA loans or VA loans, but you can get jumbo mortgages and mortgages that are not insured by the U.S. government. You can have some prepayment penalties on those. But with government loans, for the most part, it's not possible to have prepayment penalties because they made it against the law back after the 2008 meltdown in real estate. So those are the questions that I think, as a home buyer myself, that you should be asking a lender before you move forward. If you'd like a copy of that list, just connect with us at gogaddisradio.com and I'll shoot you over a copy of it myself.